Good morning, everyone. Welcome to another RF Crypto video. On today's markets, we see a almost 4% decrease from yesterday. The crypto markets were making a steady recovery. They were making a good recovery, but it's almost all wiped out in a space of 24 hours. Bitcoin is down by 4.5%. Ethereum is obviously overreacted once again, and it's fell by almost double of what the general market has fallen by. So the general market has fallen by 3.7% and Ethereum has fallen by 6.3%. The markets are generally down. However, we see some of the coins performing positively. And as I said before, and as I keep repeating because this is very important, this is because as time goes on, cryptos become less and less correlated with Bitcoin and Ethereum. And this is a result of token-specific factors that causes their prices to move either up or down. These factors are independent from Bitcoin. So even if Bitcoin moves down, these coins might have factors that are going in their favor, and it causes the price of the token to go up. And that's what caused Terra to go up or Luna to go up while the whole market is down. This is a good sign because it means that there is a lot of decoupling going on. The whole market doesn't depend on Bitcoin anymore, and all coins can now move independently without having to follow the trendy cryptos like Bitcoin and Ethereum. Looking at the Bitcoin charts, it briefly almost tested the $46,000 level, and then it just got sold off by the bears to the point where there was this massive red wick to the 41,600 support level, and it's now testing the support level. And it's just a matter of time for us to see whether it's going to drop below this level to 40,000 or rise again and trade between the 41,600 and the 46,000 level. But at the moment, I think that it's going to survive this dip and remain within this band. There is a massive sell-off in the market which caused this massive red candle. However, the bulls quickly went into the market and started buying up again, and we see this little green wick which could be further extended if this buying continues. So the bulls are back in the market. They're trying to push the prices up and prevent it from going below this 41,600 support level. So it's just a matter of watching the charts, seeing how the markets move, and also obviously we have to watch the stock markets because the Nasdaq saw a 1.46% decrease, and if it continues decreasing, we will obviously see a decrease in the price of cryptocurrencies, especially Bitcoin, and breaking the trend and going towards this new $40,000 support level. Why has cryptocurrency prices declined? It's basically because Russia intensified its attack on Ukraine. It's captured the southern Ukrainian city of Kherson, and it's ramping up an offensive on Kiev and Kharkiv. There are reports now that a nuclear power station is under Russian control and that one of the reactors are under fire. And it's been said that if one of those reactors explode, it's going to be 10 times worse than Chernobyl in 1986, which is a big deal. The fallout from the radiation might be intense, and this fear played in people's minds, and they started selling off part of their cryptos, putting it into safer assets. These include bonds and gold. And I suppose we haven't seen a radical decrease in the price of cryptocurrencies because this intensification in attacks isn't as impactful as the initial attack. Of course, it is brutal and it's causing an increase in geopolitical risk, but the magnitude in people's minds and in a psychological sense isn't as great as the initial invasion because the fighting has been going on. So the initial invasion had a multiplied effect, and now this intensification only has an additional effect, if that makes sense. Another reason that crypto might have gone down is that Russian crypto volumes across major exchanges plunged by more than 50%. Russia-denominated crypto purchasing and trading on major exchanges have faltered, debunking theories that the country will pivot to digital assets to circumvent sanctions. So on Wednesday's video, I spoke about how Russia will definitely not be able to use crypto to circumvent sanctions, and this is just proving its point. And because there has been a decrease in trading volume, coupled with the fact that there has been increased selling in the market due to the increased risk because of the intensification of the invasion, there has been a downwards pressure in the Bitcoin price and the crypto market in general. How will the war in Ukraine fuel a sharp hike in inflation? We thought that at this point, the pandemic-related inflation would start to decrease, prices would stabilize from inflations of over 10%, but we were caught by surprise, and this invasion will cause undoubtedly the rate of inflation to pick back up. It will fuel a sharper rise in inflation, and this is mainly because of energy costs. European natural gas prices have surged by almost 70% after the invasion of Ukraine, while the global oil price touched $105 for the first time since 2014. And this is really, really concerning because a lot of the countries in the EU, especially Germany, are dependent on external sources of energy, especially more so in the last 2 decades. And a lot of it is coming from Russia. With the rise in the prices of natural gas and oil, the price of electricity is going to go up. Not only will you face a higher electricity bill, but every single sector in the economy will feel the brunt because everything runs on electricity. And because the price of electricity is going to rise even for businesses, this cost is going to be passed on for consumers to bear. So it's a double-edged sword where people are paying higher prices for electricity and they're paying higher prices for goods and services to cover for the costs of higher electricity. So the prices will rise almost in a doubled effect. Another very important cost will be transport. Because the price of oil is increasing, the price of petrol and diesel will also increase. And what that means basically is that the cost of transportation will increase because transportation runs on petrol and diesel. When transport costs increase, everything increases because everything is transported from its manufacturing hub to your wholesaling hub to your retailing hub. So if transport costs increase, that gets added up to the cost of the final goods that are being transported. So automatically, the cost of living will rise because the price of these goods will rise as well. Not only that, transport costs in general are going to increase. You'll pay a higher amount to fill your car with petrol or diesel. Fuel prices are already at all-time highs in most countries in the world, and increasing oil prices are just going to exacerbate that. The global financial markets have also been in turmoil after the invasion. Billions have been wiped out from the value of the FTSE 1000, and it triggered a flight to safe haven assets such as the dollar and US government bonds. Economists expect the conflict to complicate decisions for global central banks to raise interest rates, with some analysts expecting they may push back planned hikes despite the situation adding to inflationary pressures. So, because of increased prices and because of decreased economic activity due to increased oil prices, increased food prices, increased fuel prices, economic growth is going to slow down. And it's being expected that economic growth will be 0.5 to 1% lower than what is expected in 2022. We have a situation of stagflation which is mounting, which means low economic growth with high inflation. And this is very, very hard to solve because inflation is already extremely high. And how do you solve that? By increasing interest rates. There is an inverse relationship between the inflation rate and the interest rates. If you increase inflation rates, you slow down the economy, which lessens inflationary pressure on the economy itself. However, there is a problem here. Governments just cannot increase interest rates a lot anymore. And this is mainly because economic growth has slowed down. If they increase interest rates, economic growth is going to go down. And the growth is already so low that a small increase in interest rates is going to cause negative growth rates. And this nobody wants. And because of this, central banks are currently in a limbo. Do we increase interest rates? Do we not increase interest rates? And it seems like interest rate hikes are going to have to be very, very slim, or they're not going to happen at all because a depressed economy cannot afford such hikes. You need to have interest rates as low as possible to stimulate the economy. However, it comes at a cost of inflation. The world was moving in a good direction post-pandemic inflation with interest rate planned hikes to lower inflation with not a lot of impact on economic growth. But with the invasion, we see that economic growth is going to be significantly lower than expected. So these tools, which are the interest rates, are going to be left in a limbo. It's not going to be able to be used as effectively as before, or even at all. I think we're in an age of impending stagflation. We're going to see high inflation rates, low economic growth, until at least this conflict is over. And this is going to be a very, very painful time for a lot of people who are going to see most of their bills going up, who are going to see prices of food in the supermarkets going up, the fuel prices going up, everything's going to go up, despite the fact that real wages are not going up due to the high inflation rate. People are going to have less real money, even though they're getting the same amount of wages due to inflation eroding the value of their money. However, I'm sure that the officials at the central bank are very, very capable, and they will be able to take us out of this conundrum sooner rather than later. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, please hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely, and cheers.